This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report podcast highlights for the week of December 12th, 2022. Just a reminder, a full daily review podcast is just one of the benefits you receive as a member of TF Metals Report. You'll get a post every morning summarizing the events of the day, and then we'll wrap it all up with a podcast every night. They're usually 15 or 20 minutes, include a news of the day, an update of all the charts, and these podcast highlight shows are just little snippets of what we talk about each day. As the week began on Monday, December the 12th, we knew it was going to be busy and it was going to be volatile with the latest CPI report on Tuesday and the latest Fed meeting concluding on Wednesday. So we had no idea where gold and silver were going to go, but we knew one of the keys would be the dollar index, whether it would rise or fall on all of this news. So the chart of the dollar index was just one of the charts we took a look at on Monday, December 12th. Okay, so like I said, just 4 charts because we're not going to get married to these charts because God knows what they're going to look like by tomorrow at this time, and then God knows what they're going to look like by Wednesday or Thursday at this time. But the dollar was up today, off its highs, kind of a little spinning top little candlestick with the thing right in the middle. And at the last look, it was up about 10 or 15 cents on the day at about 105. Okay? Downtrend, right? A little intermediate, or I should say short-term downtrend. Struggles at the 200-day. If, Powell were to come out, if the CPI is a lot higher than expected, or if Powell comes out and doesn't hike 50, instead hikes 75, and says he might do 50 in January, who knows? Dollar could go up, blast 2 or 3 points higher. I don't think that's what's going to happen. And instead, we'll watch to see not only if it can get through the 200-day, but get through that trend line as we go through the week. Tuesday the 13th did bring that latest update on inflation in the U.S., and though it's still annualizing over 7%, it was a little more tame than expected, and that led to a pretty good rally in the COMEX precious metals as thoughts now turn to maybe the Fed won't be hiking as aggressively next year. Well, we'll see about that, and we'll see where that all leads. But this chart of silver that we discussed on Tuesday is something you should recognize if you've been following along with these weekly podcast summaries. We started drawing the bull and the cup and handle in silver a couple of weeks ago, and it has turned out to be a very good predictive tool. Well, guess what? There are even longer-term bulls that look pretty symmetrical on that silver chart. And if those turn out to be predicting tools as well, then they're signaling higher prices ahead through later this month and into January. Again, this chart of silver, just one of the multiple charts we discussed on Tuesday, the 13th. Here's your bulls in silver. Look at this, is remarkable. You can see the little one, right, between July and November that we first picked up on. But look at this big one off of 27. That suggests that by, middle of January, late January, we could be all the way back up at 27. These all just line right up with that low on September the 1st. And again, look at this. From the middle of April to the 1st of September is 4.5 months. So when could this bull project we'd be back to 27? Well, 4.5 months from September 1, middle of January. Wednesday the 14th brought that December FOMC meeting and a bit of a surprise. Powell and his goons talking about hiking rates maybe 3 more times for another 75 basis points in 2023. Stock market didn't like that at all because what Powell is doing is driving the economy into the ditch and is going to bring about a very sharp recession next year. And while that will be good for gold and silver, as gold and silver looks ahead to the next round of rate cuts and more QE in 2023, in the meantime, the stock market worries about recession and lower earnings, if you think fundamentals still matter. Anyway, the stock market reacted to the downside on Wednesday and actually through the remainder of the week. But that was something that was in our focus Wednesday, December 14th. Okay, here's that chart of the S&P. We're going to watch this closely because it is possible that the S&P will fall here. We've been talking about this for a couple of weeks now. That's another point on the trend line, back below the 200-day. The area that we want to watch, it's going to be really, really important tomorrow, Friday, and into next week, is this 3,900 area. I just drew the line as purple, so I was a little too lazy to make it blue and red. But you can see the importance of 3,900 going all the way back to May as either support or resistance, and right now it's support. Any breakdown below 3,900 If the S&P suddenly drops 100 points tomorrow or Friday and closes below 3,900, man, look out. 3,700 would be next. And the only hope the bulls would have would be tracing out some massive inverse head and shoulder bottom. Keep an eye on the stock market, because Powell still wants it to go down. Thursday the 15th brought a sell-off in just about everything in a reaction to that forecast of a couple additional rate hikes out of the Fed in 2023. Stocks were down, the metals were down, you name it. It was all down, except the bond market, where bonds were rallying and being bought. And why? Because the bond market knows Powell and his minions are full of crap. Oh, they might talk a good game about hiking rates, but if they do, they are going to drive what is already forecast to be a pretty steep recession in 2023. They're going to drive it even steeper, off the road, down the cliff, tumbling into the abyss. That's what the bond market is sensing, and that's why long rates are going down. You can see that in the chart of the 10-year note, and that was a chart we discussed Thursday the 15th. Here, look at this 10-year note. Again, this is the bond market calling Powell's bluff, calling his fluff, if you will. Obviously double topping up around 4.25, and now in just the last 2 months alone, from 4.25 down to 3.45. Look at what's happened this week, just the last 3 days. Rally in the bond market, falling rates. Should be, we're raising rates. Yes, we're going to keep hiking rates. And so rates across the board should be going up. Oh, your credit card rate's going up. Don't worry about that. Yeah, right. Not 10-year note, because the bond market knows what's coming next. And that's why you have to know what's coming next too. And on Friday, December 16th, we wrap up what was a very volatile week with an uptick in COMEX gold. In fact, COMEX gold is going to wrap up the week just only down a couple of bucks, which is pretty good considering all that took place. As you can see on this chart, we were down on Monday, big surge on Tuesday with the CPI, big downdraft Wednesday into Thursday after the FOMC, and then a comeback on Friday. Sets the stage to finish the year relatively strong with still a pretty good chance at finishing green on the year. If we can make it to December 30th above 1829, gold will have finished the year in the green, which is more than you can say for the stock market. And that's certainly going to be a focus next week. Stock market not liking the FOMC at all and down again here today on December the 16th. Closing below 3,900, looking like it wants to target even lower, maybe 3,700 next week. And I'll just remind you, if you think stocks have to go up in December, they don't. In an analogous situation to 2018, stocks are falling. And it was back in 2018 where the S&P fell 16% heading into Christmas. Just in the month of December alone, that led to Powell pivot number 1. Maybe we're getting close to that again here now in 2022. We'll see. Keep an eye on all of that next week. And come back next Friday for another edition of your TF Metals Report podcast highlights.